So my dear friends, happy day. So let's continue with the topic insurance claims. This is now lecture number 5, I think so, lecture number 5. So let us have the recap as usual. Chapter is insurance claims. So very dignified premier profession, so passionate about doing CA. That spirit always should be kept very high. Number 2, you should engage yourself in the class, not merely hearing like watching some movie etc. So you should really participate, calculate. So with the calculator, numbers will be visible here. Don't simply go for copying. Okay, your calculation is very much correct, sir. Like that, don't tell. Sometimes I might commit mistakes. Intentionally also I may commit. I want you to respond. So thereby, please do calculate, my dear friends, and confirm with all your workings, etc. And when you do that calculation, you find some other way of doing, etc. You can ask, etc. Everything. So only thing is you should experience a calculation. Recap exercise. Learning objective in this topic is computation of claim for loss of stock, loss of profit in a fire insurance policy from the viewpoint of insured. So in this first computation was computation of claim for loss of stock, 4-step approach, GPR, stock on date of fire, loss of stock, and finally claim. So these are the 4 things, my dear friends, 4 steps. First we thought about common sense approach, layman's approach. We created this 4 steps. Henceforth only academical recap. So those conceptual recap, 4 classes we did. No more conceptual recap. We do only the academical recap. What is academical recap? We created 4 steps. So 4 steps. So step number 1, GPR. In this GPR we have so many steps. So many inputs or so many points to be noted. What and all? You should search for GPR in the question. Sir, GPR is given. Take that GPR. Only thing is, suppose GPR was expressed on cost, means you should convert in terms of sales. Suppose GPR was given, simply mention GPR on sales given na, take that GPR as it is. Suppose nothing mentioned, GPR 20% na, it is on cost or is it on sales? It is on sales. Like that we understand. Sir, GPR given, 2 or more GPR given, sir. GPR of 2 or more years given, sir. In that case, what I should do, sir? I should take average of GPR. Sir, simple average or weighted average, that depends upon. So they will indicate such GPR. Like that problem have never come. So I just told you that conceptual part, my dear friends. Sometimes problems say they would have given average GPR. Like that only they will give. So normally simple average is what we should consider. Then third point, what is to be noted is that, my dear friends, suppose GPR is not given, means you prepare trading account of previous year for which information will be given in the question. You arrive at GPS balancing figure and find out GPR. In the presentation of such trading account, effect of abnormal item shall be eliminated. The last class, entire class, we have done only one question. So we were focusing on how to eliminate the effect of abnormalities. We have taken a lot of discussion in that regard. So how to eliminate the effect of abnormalities. How to eliminate, my dear friends? There are 2 approaches. One is called restoration approach, the other one is called complete elimination approach. Like that, who named this methods and all? I only named. There is no other naming or division of such methods and all, my dear friends. There are 2 different practices and different solutions. Like this, one theory, one segment not there in the study module or in any books like treatment of abnormal goods, etc. Based on the practices in the solutions, we created theory for you. So like that, we name for our classroom purpose only something called restoration approach, complete elimination approach. Examination don't make points, assume like I followed restoration approach. Like that, examiner will not understand. Okay, so restoration approach means what? Treat the goods as if they are dash goods, normal goods. Ultimately, what is our objective under both the approaches? We want profit margin only on dash goods, normal goods. So adhike we should do. So for that purpose, what we can do now, treat the abnormal goods as if they are normal goods, which means whatever reduction, whatever you have made, you add back. This is called restoration approach. Complete elimination approach means that goods should be completely eliminated from trading account. So we don't want the effect of that goods. When we say elimination, means it has to be from both debit side and credit side. So one thing is sure, some goods are there now. It will be there in both the sides. It will be there in opening stock as well as closing stock, or opening stock and sales, or purchases and sales, or purchases and closing stock. Because once we have the stock, it should have been either sold or it should be there in closing stock. No, so that way you should be going for that elimination. I hope you are following this. Okay, so how to eliminate? So we have one unique statement or trademark statement. Wherever whatever value included, that value excluded from that place. So what does that mean? Which means suppose it is there in closing stock, also see whether it is there in opening stock or in purchases. Question doesn't say so, sir, where it is included. Now I will assume it is out of dash purchases, the damaged goods which is there in closing stock. So and the damages, is it out of opening stock or is it out of purchases? So we understand it is out of purchases, normal assumption. So like that, if it is there in purchases, it is there in closing stock. But in purchases, it will be included what price? It will be included original cost price, because it was purchased at a particular cost price, that price will be included. Closing stock reduced price will be there. That is what we told. Purchase original cost price and closing stock reduced price. Wherever means purchases and closing stock, whatever value, original cost price and reduced price, that price excluded from that place. Like that we discussed, my dear friends. I hope you understood this concept pakka. Then we told you by solving one or two questions. Later on I told you one new understanding, the clear understanding. What is that? That even though we have two methods, if the abnormality is there in sales, we cannot follow dash approach, we cannot follow restoration approach, we can follow only what? Complete elimination approach. Why, sir, we cannot follow restoration approach? We know the original cost price, it was sold at 250 less than they have given, 250 less than cost price given. We don't know dash price, original selling price. Question, if give original selling price, what I will do? They will not give only. If they give I will not prepare trading account only to find out GPR, because I have cost price. If I have original selling price, difference is profit, then I can express the profit on selling price, like that margin I can find out, which means we don't know dash price, original selling price. But we can't restore it to original selling price. When we don't know, we can't restore it, correct? We can restore it to original cost price. Opening stock, purchases, closing stock. Here and all, if you want to restore only a dash price, cost price. But sales, you should restore a dash price, original selling price, which we don't know. So thereby we cannot follow dash method, restoration approach, if you have abnormality in sales. Okay, okay. But there what we can follow? Only dash method, complete elimination. So thereby consistent in our classroom, whatever method abnormality comes, even though it is there only in closing stock, consistent here and after, we are going to follow only dash, we are going to follow only complete elimination approach. Like that I taught you, my dear friends. I hope you remember. In this GPR calculation, one more extra point what I told is about price level changes. We are finding GPR of which year? Previous year. Now this GPR of previous year, when we find selling price increase, selling price decrease, GPR may be different. About how to adjust the GPR, I will teach you later. So I told you substantially we can complete this topic in this class. Cannot be possible. We actually require one more class completion. So next class this topic will be taken. I will be concluding on to loss of stock, and then we will move on to loss of profit. Okay. Anyway, coming back to this, my dear friends. First step over. Now second step, finding stock on the date of fire. Finding stock on date of fire, we prepare trading account. We call the trading account as dash trading account, memorandum trading account. Why do we call? Because most of the informations are actuals are estimated, they are estimated. So that way we take all the information, opening stock, purchases, sales, closing stock as GPR. Which one we will take? GP we will take. How to take GP? Sales into GPR as we have computed in step number 1. So that closing stock on the date of hire will be the balancing figure. I hope you understood this. Anyway, all the information will be given. GP you can take it. So here also, so that we can arrive stock on the date of hire as balancing figure. Here also we told, suppose we have abnormal items, what and all we can do? I told you 3 procedure. What are the 3 procedure? Now, in the abnormality, eliminate from normal items, show it in a separate column. Show it in a separate column. Then another possibility is that, sir, eliminate it, don't show in separate column and all, separate in a working note, find out what is the closing stock of abnormal goods, because we don't require a profit margin etc and all to find out stock of abnormal goods on the date of hire, because it is independently to be computed. There is no separate margin. Some abnormal goods sold at some price, some other abnormal goods can be sold at some other price also, correct? There is no rigid margin for the abnormal goods. So either you separate it and show it in a separate column as abnormal goods, or eliminate it and in a separate working note you find out what is the closing stock of abnormal goods. Like that I told. In this abnormal goods column also, maybe when I discuss so much of so many methods comes, confusion automatically follows. The problem is that no, study model, when you see the solution in one problem it is done like this, one problem another way it is done. It is my duty to explain why it is done in each of the problem like that. Then whatever method you feel comfortable, you can follow consistently for all the problems, because this is only presentation difference. You cannot have answer difference. Sir, my profit is different, sir. In the column, if I do like one method, I get different profit. If I do in another method, I am getting different profit. Profit first of all not answer there. What is the answer? Stock on the date of hire. So you are having different profits, because it is a worksheet, my dear friends. It's not the real profit you are reporting to insurance company. This is the profit I reported, etc. So thereby, and similarly, I told you one more thing, sir. In the first step, the trading account, I do restoration approach, complete elimination approach. Based on that, it will affect this second step. No, that is a separate working note to find out GPR. This is a separate working note to find out the stock on date of hire. So many things I discussed, my dear friends. What I told now, once a closing stock of previous year is reduced, if you ask me strictly, and the reduced price I should take at the opening. If the closing stock of previous year is already reduced because it is abnormal. In this memorandum trading account, I should take a reduced price, original cost price, I should take a reduced price. Then I will take the sales and I will be separately working out what is the closing stock. Profit will be only balancing figure, correct? Yes. But I told you, my dear friends, institute module in one of the question, even though on the opening date itself, we know it is already reduced. Books value is less, but we are showing original cost. You know why? Because on the date of hire, remainder of the goods, not the original goods, remainder of the goods was estimated worth its original cost, like that given. So it will be better to explain from opening also this was the cost, from that this much was sold, closingly it is showing at cost, we can explain. Thereby institute have taken that original cost, put a asterisk, and they explains below that particular solution, book value of this goods is only 4,600. They are explaining. So students know unnecessarily don't be concerned or panicked about that number what I have written in my solution as 4,600 and 6,900. When I have taken 4,600 here and you see in solution 6,900, no problem. So no panic. You can take 6,900, then accordingly your profit or loss will be different. So here you will be having loss instead of profit. That doesn't matter. Anyway, this stock to be independently arrived. Correct, Appa? I already taught you how to find out the value of stock. Because 69 value 46. Now 3450 costing goods sold, balance goods 3450, whose reduced value will be 2300. How did you find out 2300? 4600 is the value of 6900. What is the value attributable to 3450? I taught you. Then why did you strike it off, sir? It is because this is the way we should calculate, but because the statement I have already given, question I have already told that the remainder of the goods is now worth its original cost. So thereby I take directly 3450. If nothing is mentioned, if that particular line alone not there, what value I would have taken? I would have taken 2300. That is why I wrote 2300. I striked off, I explained you properly. 3450 I have taken. I hope you understood. Ultimately, if you take 3450, pakka. Here, what number the examiner is not at all bothered about what number you show in abnormal goods column except the closing stock. Understood? Even if you don't show this column also, institute is not at all worried about that. Understood? They are concerned only with the normal goods column. How did you arrive? This is balancing figure. Abnormal goods separated 3450 note you can provide. What is the note? The remainder of the goods was now to be taken at original cost. That is 3450. A small note is sufficient. All the other workings are not at all sufficient, not at all required. I hope you understood. Like that. Very elaborate discussion I made in the previous class about the step number 1 and step 2 about abnormality, my dear friends. Not to confuse you, but to provide clarity. So many students across so many places, blind understanding. This is what you should take. 6,900. Some classroom they will take 6,900 should be taken. That is, original cost should always be taken. Logic behind why what you should take, etc. and all should be explained. I have told you. Anyway, I am not telling whatever you have learned. Suppose you learned somewhere something, those numbers are not really relevant as long as you know how to arrive at the closing stock of abnormal goods. Independent, based on the information, you should arrive at the closing stock of abnormal goods. If the goods are already reduced, closingly it is reduced value only. Only if the question says that it is now worth to original cost, you should be taking dash value, original cost. Is now understanding. I hope pakka understood. No more confusion, right? Now proceeding further, my dear friends. Based on this, we computed loss of stock, we computed claim, and I gave you 2 problems as gift. I don't know to what extent you get same answer, etc. and all. So even though it is gift, I would like to quickly or scribbling mode layout, I will be trying this particular problem, my dear friends. So those question number 10 and 11, and then today only problems, no much concepts and all. So maybe for each of the question, that question special points alone I will discuss. It won't be like 1 hour concept. So directly the special points of that question and solution, like that only we are going to solve today. So proceeding directly with question number 10. My dear friends, question number 10. From the following information, compute the amount of claim under loss of stock policy. Sum assured rupees 73,000. Accounting year, calendar year. So precisely get all these facts in your mind. Accounting year is calendar year, Jan to December. Reason for damage 30th June 2020 fire accident. About June 2020 that is a fire year. About what is previous year? 2019 is the previous year. Salvaged stock given. Stock on 1119 19 is previous year, 1119 beginning of previous year. So opening stock of previous year, closing stock of previous year, purchase of previous year, sales of previous year. Super information given for us to prepare trading account of previous year. Then purchases and sales of the current year till fire also provided. Next, stock on 31st December 2019, that is closing stock of previous year, which means closing stock of previous year has been undervalued by 10%. Now please understand, this is not abnormality, it is a valuation policy. It is not abnormal, it is a valuation policy. Above there what we told, if there is undervaluation or overvaluation of overall stock, it should be brought to the original cost price. Sir, we are doing restoration approach. In restoration approach, complete elimination approach, that concept illa. We already took one important step. If there is overall total stock is undervalued or overvalued, it should be brought to the original cost price. Like that one point we told, you should apply that concept. Next, a stock taking conducted in March 2020 had revealed that stock costing rupees 80,000 were lying in a damaged condition. 50% of these stock had been sold in May 2020 at 50% of the original cost, and the balance was expected to be sold at 40% of original cost. Like that it has been provided as information, my dear friends. Okay. In the damaged information is there in the previous year or current year. Here damage say or abnormality happened only in the current year. It is not in the previous year. In March 2020 stock taking, we find that some goods were in damaged condition. So it is not in 2019. It is in the year 2020. March 2020. Appa 1920. No calendar year. This fire year. During the year, in between the year, they took a stock taking. So stock taking, we understand goods costing rupees 80,000 were in a damaged condition, and they feel that and the 80,000 what is that maximum we can recover in a damaged condition. Other 50% they have already sold. Remaining 50% they expect to sell at 40% of the original cost. This is the information given, and the other informations are already provided. Compute the amount of claim under loss of stock policy. Once again, I am reinforcing the point. In this question, there is no abnormality in dash here. Previous year, here abnormality is there only in dash year, current year. But what about that 10% undervaluation? That is not abnormality, that is a stock valuation policy. That is different, the abnormality is different. Understood? So overvaluation or undervaluation of stock is not abnormality, that's a valuation policy. So we can't question why did it do. There will be different formulas, standard costing application, I told, but for the purpose of claim, you should bring it to the original cost, like that we have already discussed. Anyway, proceeding, my dear friends, I will not have much discussion because it is actually gift problem. So takku we will do question number 10. So step number 1, gross profit ratio. So for which we present dash account, trading account for the year 2019. So trading account for the year 2019. We present trading account for the year 2019. In which they very clearly given opening stock, purchases, sales, closing stock, like that given. What is the opening stock for 2019? So they have given line by line information 1,80,000. So opening stock 1,80,000. Purchases, so it is 3,30,000. Sales 3 lakhs. Closing stock they have given us 2,70,000. So what we understand, there is an undervaluation. So bring it to the original cost price by 90 into 100. So it is 3 lakhs. So on that basis we understand gross profit is equal to 90,000. Gross profit is 90,000. Like this, we arrived at. So still step number 1 not completed. GPR is equal to 90,000 divided by 3 lakhs into 100. It is 30%. So we have computed what? GPR. Sorry. What is step 2? Step 2 is, so this and all I won't do very slow. Like previous problem, it took 1 hour. This will be taken only 10 minutes because it is gift. But still I am solving the solution for you with the adequate explanation. So stock on date of fire. Stock on date of fire. So we will prepare dash account, memorandum trading account. Memorandum trading account. We prepare memorandum trading account for a specific period from the beginning of the year in which fire occurred 1/1/2020 till the date of fire 30th June 2020. Like that we are preparing. So here we have normal goods and abnormal goods. So if you prefer, you need not have these 2 columns and all. I would have 2 columns here. Say normal goods, abnormal goods, normal goods, abnormal goods. Okay. So listen carefully, my dear friends. So here opening stock, opening stock. Sir, last year you made some adjustment or restoration and all. So thereby you will eliminate a no. First of all, that is a valuation policy. Due to that, there is no normal or abnormal goods. It is just that normal goods only whose value will be taken as 3 lakhs. Sir, reduced price only you should take. Sir, again that principle I told only for the abnormality. The last year whatever happened is not abnormality. The original cost price of the normal goods is 3 lakhs. Like that only you should understand. So thereby opening stock is 3 lakhs. Then we have purchases. The damage have happened during the current year, no. So when the damage have happened during the current year, it is out of the previous year goods or out of current year purchases. Like that question will come. If nothing else is mentioned, I have already told you the damages happened in the current year is out of current year purchases. Like that we understand. Purchases, how much will be included? Original cost price. What is the original cost price of the damaged goods? 80,000. So what is the purchases given for the current year? 4 lakhs. We understand, my dear friends. Here it is only 3,20,000. This is 80,000 given in the question. Where from you got the information? So here this number is 4 lakhs minus 80,000 is how we got 3,20,000. Similarly, my dear friends, we have sales. If you take sales, my dear friends, the question tells total sale is how much? 7,20,000. We understand that 50% of the damaged goods, 50% of the damaged goods has been sold in May 2020 at 50% of original cost. Carefully you should understand. First, total goods or quantity you tell 80,000. And the 80,000 50%, how much? 40,000. In the 40,000 is reduced price of original cost. Original cost is original cost. Only thing is it has been taken half the quantity. Now this was sold at 50% of the original cost. So which means 40,000 into 50%, which is 20,000. So listen carefully, my dear friends. So it is, carefully you should calculate. This is 20,000. How the 20,000 came na? 80,000 into 50%. The first time when you do 50%, I am not reducing price. I am first understanding the quantity, half the quantity sold at 50% of the price. Because sometimes students will get confusion. Why 2 times you are doing 50%? It has been given sold at 50% of original price. No. See, full goods are not sold, half the goods are sold. But half the goods are first, what is the value? The quantity information not there, no. Half the goods are 40,000. The 40,000 is reduced price of original cost of half the goods sold at the 50% of the price. Like that we understand as 20,000. But what is this number? It is 7 lakhs. How the 7 lakhs came? It is 7,20,000 minus 20,000. Like that we got this number, my dear friends. So that way very clearly we are eliminating the abnormality from normal goods and putting it in a separate column. Now normal goods is ready for, we can take gross profit here because the margin is true only for the normal goods. You can't apply that margin for the abnormal goods. So for the normal goods, what is the margin? The margin is 30%. 30% of 7 lakhs. How much? 2,10,000. 7 lakhs into 30%, it is 2,10,000. But what happens now? That particular column will be eligible for balancing. So thereby we understand 3 lakh plus 3 lakh 20, 6 lakh 20 plus 2 lakh 10, 8 lakh 30,000 minus 7 lakhs, it will be 1 lakh 30,000. So we understand by closing stock, it is 1 lakh 30,000. How did we arrive this 1 lakh 30,000? Balancing figure. We arrived 1 lakh 30,000 as balancing figure. So far you understood. Abnormal goods. Once again I told you, my dear friends, abnormal goods. Sir, okay, I will tell later one more point. FAQs are not coming to my mind. Whenever I write some number, those FAQs now after the discussion, students used to ask some doubt. No, that comes to my mind. Then if I start explaining, it will confuse you. Let me tell you later. So presently, closing stock is not balancing figure. Here independently arrived. How it would have been independently arrived? I would have taken here 20,000. If no other information given, I would have taken how much? 20,000. How this 20,000 will come, sir? Because you should understand what was the original cost price? 80,000. That reduced to 50%, no, 40,000. Reduced to 40,000. How do you know? Because it has been sold, a part of the goods has been sold for 50%. Or you need not take all these things. 80,000 la, half the goods sold for 20,000. But remaining goods expected to be sold only for 20,000. This is the price. I would have taken the number 20,000. Same calculation I would have applied if no other information given. Understood? But in this problem, separate question says information. What is that? Remainder of the goods is expected to be sold at 40% of original cost. First of all, please listen carefully, my dear friends. It is 80,000 into 50%. Why 50%? You told only 40%. No. First half the goods. Remainder half, no. Half sold. Remainder 50%, which is how much? 40,000. And the 40,000 represent reduced price of original cost. Original cost, not reduced price. Original cost of half the goods. So that was sold at 40% of the original cost. So 80,000 into 50% when you do, you are getting 40,000. No, that 40,000 is reduced price of original cost. Original cost of half the goods that was sold at 40%. So thereby you should take how much? 16,000 and not 20,000. Understood? Sorry. If that particular line not given, I would not have taken original cost and all. I would have taken how much? I would have taken 20,000 here, because total 80 lakh or 50% can be sold for 20,000. Remaining 50% can be sold only for 20,000. That is what you should be understanding, all of you. So what is expected to be realized, that amount only can be taken. But in this problem, original cost not the sale value also. They are determining separate sale value for the remainder of the goods. The remainder of the goods is now expected to be sold at 40% of original cost. That is why we are taking what value? 16,000. In the common sense application. This accounts no double entry. What is a journal entry? No law here. It is purely the estimation given in a English statement. The English statement you should apply mathematics. That common sense should be applied. You should not feel this as very tough. I hope you are following. About total goods 80. 80,000 50% was sold at 50% of the original cost. 80,000 into 50%. That is half the goods. Into 50% will be the reduced price. Correct? Similarly, 80,000 into 50%, which is half the goods, sold at expected to be sold at 40% of the price. Expected to be sold, it is not included in the sale value. We have to sell in future, but before that fire came and destroyed the goods. No. About how much was the abnormal goods that we had on the date of fire? We had how much? 16,000. That is what we should be understanding. So then or formality kaga, we can arrive this particular abnormal goods also as balancing figure. We will be getting loss here by loss. How much? 80,000, 36,000. So here it is 44,000. You arrive as balancing figure. So this particular number not actually relevant. More what is our relevant information? Closing stock. Closing stock of dash goods and dash goods. Normal goods and abnormal goods. We are not at all bothered about loss here. Understood? So this is how you should be understanding, my dear friends. Proceeding further. So now we have third step. What is the third step? So it is loss of stock. As far as loss of stock is concerned, we have stock on date of fire. We have normal goods, abnormal goods. Normal goods how much? 1,30,000. Abnormal goods how much? 16,000. Total how much? 1,46,000 is the total goods minus salvage value. Salvage value. What is the salvage value? 6,000. So thereby we find loss of stock is 1,40,000. 1,40,000. Next we go for computation of claim. My dear friends, as far as claim is concerned, policy amount of rupees, sum assured, it is given as 73,000. 73,000. So we can understand stock on date of fire is 146, policy amount is 73,000. It is underinsured. It is underinsured when the stock is 146, but you took policy only for 73,000. First, so three conditions you should check. What and all? Complete loss or partial loss? Partial loss. Whether the agreement provides about average clause. Sir, nothing is told, sir. If nothing is told, what is our understanding? Agreement provides information about average class. Third, just because of agreement says there is average class, should I apply average class? No. Only the third condition should be satisfied. What is the third condition? It should be underinsured. Then only we will apply the average class. Understood? So that way we will apply the average class. So thereby claim is equal to loss of stock into policy amount divided by stock on date of fire. So which is 1,40,000 into 73,000 divided by
1,46,000,
which is equal to 70,000. This is how we should be calculating this claim. Understood? So in this problem, like this question, it is an RTP question only. So like this question, instead don't take this particular revised adjustment etc. and all happen. And one more thing is, here it is not out of previous year. Previous year have no connection. Those issues and all will arise only if it is previous year. Because I will tell you FAQ. Sir, you only told in the previous question you should take only reduced price. No, reduced price I will take only if it is already reduced in the previous year. Now this damage happened in previous year or current year? It happened in the current year. If current year damage happened, it is there out of current year purchases we are taking. Purchase how much is included? So when we bought the goods, we paid the money, how much? 40,000 or 80,000? 80,000. Upon the 80,000 we are taking. Understood? So like that, don't make it rule and all. Last question you took reduced price in this abnormal goods column. This question you are taking the original cost price and all. Common sense prevalence. Last year, here abnormal goods was carry forward from previous year. This year, in this question, abnormal goods is out of current year purchases or previous year purchases? Out of current year purchase. This is the concept. Other than that, there is no complication, my dear friends. This 16,000 you should independently arrive. How do you get 16,000? Because it is now expected to be sold at 40%. 80,000 into 40%. Why not 80,000 into 40%? So 80,000 is full goods. Adala half already sold. Remaining half you should apply 40%. Understood? Okay, so thereby this is how you should solve the problem. So copying slide, my dear friends. So question number 10, step number 1 is GPR. Should stop the video, copy, and then resume the video. Because sometimes when I am solving the problem, here going, here coming, sometimes you may not be copying properly. So for that extra time, we are just spending here. Okay, so proceeding further, my dear friends. Okay. So taking now question number 11. So I think 1 to 11 we will be completing, but one question yet to be completed. So question number 11, let me try that also. On 11/11/2020, question number 11 la dates super. The premises of Canal Limited was destroyed by fire. The following information is made available. So first of all, be very clear, stock is given us on 1/4/19. So the way in which information given, we understand they are not following calendar year, they are following the financial year, April to March. Upon 11/11/2020 fire accident means which year fire occurred? The fire occurred in the year 2021. Fire occurred in the year 2021. It is not a calendar year, it is financial year. So by the information we could see this financial year. So thereby fire occurred in the year 2021. So what is the previous year then? The previous year should be 1920. So we expect 1920 information also. Let's see. 1/4/19 stock given now. What is that? Previous year opening stock. Purchases of previous year, sales of previous year, stock, closing stock of previous year given. Then purchase and sales of current year given. Super. In valuing the stock on 31st March 2020, which means previous year closing stock when they were valuing, due to damage, 50% of the value of the stock, which was originally costing rupees 22,000, was written off. In June 2020, about 50% of this stock was sold for rupees 5,500 and the balance of obsolete stock is expected to realize the same price, that is 50% of the original cost. The gross profit is to be assumed as uniform in respect of other sales. Stock salvaged from fire amounted to rupees 11,500. Compute the value of stock lost in fire. In this question, if you note carefully, the question is asking you only the compute the value of stock lost in fire. So they are not asking you the claim portion. The question is not giving you the policy amount also, my dear friends. They just provide only this information only. So any obsolete stock, salvage stock is given as 11,500. So just we need to go for step 1, 2, 3. There is no fourth step here. So GPR, stock on date of fire and the loss of stock. So these are the 3 steps we are going to present in the solution. So shall we proceed? Here damages, abnormality took place in the previous year or current year. Abnormality took place in the previous year in valuing the stock on 31st March 2020. So which means it is 1920 end. So at that time, due to damage, 50% of the value of the stock which was originally costing 22,000 was written off. Or a twisting statement given. No simple statement. The original cost is 22,000. In that 50% was written off. 50% was written off. Upon 22,000, 50% written off, na balance how much? 11,000. What is write off amount? Write off amount of 11,000. Balance of 11,000. And the balance 11,000 represents different quantity or same quantity. I will ask this question because students used to be getting confusion. So if this understanding is pakka na, then no problem. So it has been given original cost 22,000. In this, because of damage, 50% was written off. Apo you have written off 11,000, and what you have included in closing stock, you included 11,000. Now that 11,000 represent different quantity or same quantity. In other words, 22,000 value, 11,000 value, same quantity or different quantity? Same quantity, but value reduced. In this point, if you understand, then it's pakka. If you think that, sir, anyway that quantity gone, no, this is remaining quantity, like that you should not tell. Understood? 22,000, 100 units, 11,000, 100 units, you should understand. Clear? Anyway, coming back to this, my dear friends. Sorry. The damage happened in the current year or previous year? The damage took place in the previous year. If the damage have taken place in the previous year, then in finding the gross profit, when we prepare the trading account, effect of abnormality shall be eliminated. So when you eliminate the effect of abnormality, there are two approaches: restoration approach, complete elimination approach. You can try, because here the abnormality is there in sales or closing stock only. It is there only in closing stock. Sir, it is sold? No, sir. Sales happen in the current year, not in the previous year. So thereby both the approach possible or not possible? Possible. You can do restoration approach or you can do complete elimination approach. Maybe orally, theoretically we will discuss both the methods, but I will follow one method only. Correct? Sorry. So how we will go for restoration approach? Restoration approach is very simple. You prepare trading account of previous year. Take opening stock as given in the question. Purchase sales as given in the question. Closing stock alone, take the number which is given as 2 lakhs, then that value is already reduced. That value is already reduced by how much? It is reduced by 11,000. So that you add back. Restoration approach, already whatever you have reduced, that you add back. Understood? So that way opening stock, purchases, sales, don't make any change. Closing stock, some value was reduced, because of damage. Whatever you reduced, you simply add back. So what was the reduction you have made? 11,000. How do you get 11,000? 22,000 into 50%. That you add back. Restoration approach over. Complete elimination approach. Complete elimination approach. So what you should understand, that good should be eliminated from both the sides. It is been given, it is there in closing stock. If it is there in closing stock, it should be there either in opening stock or in purchases. Sir, they have not told whether it is out of opening stock or in purchases. Now, what do we normally assume? It is out of purchases. It is out of purchases. So, purchase what value included? So, it has been purchased for how much amount? Reduced price. We purchased for original cost, 22,000. Closing stock, it was included at 11,000. A complete elimination approach. Wherever, whatever value included, that value exclude from that place. It means purchases lane you eliminate 22,000. Closing stock lane you eliminate 11,000. Still, you will arrive at GP. You will be getting same GP only. So, one approach simply add 11,000 to closing stock. Another approach eliminate 22 here, eliminate 11,000 from the closing stock. Like that you should be understanding. Anyway, we will follow only one approach. I have already decided we will follow only complete elimination approach throughout. Suppose you follow restoration approach, absolutely no problem. You will get same GPR as we get. So, there will be no issues at all. Then we will proceed for the memorandum trading account, my dear friends, having normal goods column as well as abnormal goods column. Tuck, we can complete this particular question. So, question number 11. Question number 11. So, we have GPR. We prepare trading account for the year 1920. Fire occurred when? 2021. 2 column or 1 column? Just 1 column. opening stock. How much is the opening stock? 3,75,000. Purchases. What is given in the question?
5,20,000.
From this we are deducting. This we are following complete elimination approach. Not 22,000. So this 4,98,000. Sales does not include. Sir, sales includes in given. No, other next year. In the year 1920, that sales does not have abnormal goods. So what is the sales given?
8,55,000.
8,55,000. So then we have closing stock. Given the question is 2 lakhs. So I should add or deduct? Deduct. See, adding is only a restoration approach, which you should do only in closing stock. Partially that this don't commit the mistake. So deduct. That is whatever included here that you should eliminate. So it was already reduced 11,000. So remaining 11,000 are included. That you eliminate. So by deducting that, you get 1,89,000. So when you do that, you will get gross profit.
1,71,000.
So it is 1,71,000 is the gross profit. Then we have GPR, which is equal to 1,71,000 divided by
8,55,000 into 100, 20%.
20% is the GPR. Understood? So this is how you should be calculating, my dear friend, GPR. Then we have step 2. Step 2 is finding stock on date of hire. As far as stock on date of hire is concerned, we prepare memorandum trading account. For what period? 1/4/20 to 11/11/2020. (11/11/2020). 12/12/2020 na much be good superstar birthday. Even Yuvraj Singh birthday. So memorandum trading accounts, we have normal goods column and abnormal goods column. We have opening stock. What is the opening stock amount? Normal goods column la you take opening stock, normal goods. This is 1,89,000. Does it include abnormal goods? No, because it is purely the normal goods. We have eliminated the abnormal goods, complete elimination. No, 1,89,000. Here is the place you need to very clearly understand. Abnormal goods. Abnormal goods is having a value of 11,000. 11,000 reduced price or original cost? Reduced price. 11,000 is reduced price. What is the original cost? 22,000. So here if you write 22,000 also, no problem. So because anyway closing stock we are going to find out separately only. Whether you write 22 or 11 doesn't matter. But you should mention very clearly this is only a book value. It is not original cost. Understood? Why do we say book value? Because in the books already 11,000 was reduced in the previous year itself. Okay, wow. So then we have purchases. What is the purchases figure?
3,41,000.
3,41,000. Then we have sales. As far as sales is concerned, my dear friends, 50% of the goods was sold at 50% of the price. Appo it is sold for 5,500, my dear friends. That is 22,000. In that 50%. 50% was sold at 50% of the original cost price. That is how you get 5,500. Correct? About 22,000 into 50%. That is 11,000. Which is half the goods. Half the goods was sold at 50% of the price, which is 5,500. What was the total sales given in the question?
4,35,500.
435,500. 435,500 minus 5,500. It is 4,30,000. So that we can apply the gross profit here, which is 4,30,000 into 20 percentage.
86,000.
Which is 86,000. So thereby we get here closing stock as balancing figure. Closing stock as balancing figure. So 1,89,000. 3,41,000 plus 86,000 minus 4,30,000. 1,86,000. So 1,86,000 balancing figure. So every account, whatever you arrive as balancing figure should be shown. But here abnormal goods column, no, it is not balancing figure, it is not finding profit. You separately apply the information given in the question. Remainder of the goods is expected to worth the 50% of the original cost price, which means the same 5,500. Same 5,500. So is it not 11,000? No, remainder of the goods 11,000. Original 22, na, 50% already sold. Remainder 11,000, which is the original cost price. That is also expected to be sold at 50% of the cost price. It is 5,500. So total 22. 22 50%, 11,000 already sold. When I take remaining 11,000, that is original cost price or reduced price? It is the original cost price of half the goods, which is expected to be sold at 50% of this price, which means the same 5,500. I hope you are following. So that is the closing stock, my dear friends. So it is given in the question that and the balance of obsolete stock is expected to realize the same price, that is 50% of the original cost. 50% original cost, now some students will think that 22,000 into 50%. Remainder first apply pannunna. So when I say remainder na 22,000, no doubt original cost of some X quantity. In that X quantity already 50% already sold. Correct? But 22,000 50% already sold. And remaining 50% how much? 11,000. That 11,000 was sold at 50% of that price, which is 5,500. Like that you should understand, my dear friends. So now proceeding for the third step. What is third step? Loss of stock. As far as loss of stock is concerned, we have stock on date of fire. Stock on date of fire. We have normal goods 1,86,000. Abnormal goods 5,500. Total 1,91,500 minus salvage value 11,500. So answer will be 1,80,000 is the loss of stock. That is the question. They didn't give you policy amount and claim amount, etc. and all. So 1,80,000. Like this you should solve. These questions, last two questions, it is not that we have taken so slow pace and all, but is the gift problem. You should have done homework problem, but still we have taken close to an hour, my dear friend. 45 minutes we have taken to complete these two questions, something which is supposed to be tried as gift. But I sincerely believe that you would have already solved the problem and you have verified the answer. Don't cheat me, my dear friends. At least from now on, any problem is given, it is definitely for you to try. Sir, I didn't understand one adjustment. Don't sit there. Break your head for some 1 hour, 2 hours for this question. Even if you try for 2 hours, no problem. But progression should happen in your brain, then definitely you should solve it on your own, my dear friends. Don't be so lazy to tell that I have not done because this adjustment I don't know. I don't know, you know English, you know maths. You have to try the problem, my dear friends. So you can't simply like show a very poor attitude. I have seen students, that is why I could immediately bring some faces into my mind and similar crowd might be there listening. So thereby don't show that laziness, my dear friend. Even if you don't know also, apply common sense, go to the end part, which might be rubbish, nonsense, mistakes, etc. But you would have made your brain work. It thinks, and then you arrive at the answer, you verify the answer, then your brain will understand. Straight away, if I don't understand anything, I'm going to see the solution. Oh, this is the way to be done, then it is not progression. You are not at all understanding. Definitely, it is absolutely very pathetic and poor, my dear friends. See, we take one question for solving it. We are not understanding. We are seeing the solution. Oh, this is the way we should do. Like that we are solving it. And we are arriving at the current result. What use? No use at all. So these are the ways, very bad practices which makes the student first of all lazy. They don't make any progress into their mind, the thought process, etc. You should do it on your own. So just because I am solving a very detailed explanation provided, don't be spoon-fed, don't become lazy. You have to try on your own. At the end of the day, you are becoming chartered accountant. I am not making you chartered accountant. It's at the end of all the credit goes to you or for you becoming chartered accountant, and if you could not, it is your fault. Anyway, so let me proceed further, my dear friends, into the other problems. We have done question number 11 up to 11. So in that one question alone we haven't done. So that I will complete and then I will proceed from 12th onwards, right? So let me try that question number 7. Let me try question number 7 now. The premises of Agni Limited caught fire on 22nd Jan 2020 and the stock was damaged. The firm makes account up to 31st March each year. On 31st March 2019, the stock at cost was rupees 13,27,200 as against 9,62,200 on 31st March 2018. Okay. The way in which March information given, we understand this company also following what? Financial year, April to March. Up first line they have given fire occurred on 21st Jan 2020 in given, no, 21st Jan 2020. It is which year? Which year? Which financial year? 2021? No, it is 1920. 1920 the year of fire. What is the previous year? Previous year is 1819. Previous year is 1819. So like that you should be very clear. Purchases from 1st April 19 to the date of fire was amount given as against full year 1819 information given. Purchase for current year given, previous year purchasing given. Similarly, sales for current year given, sales of previous year given. You are given with the following further information also. You are given with some further information. In July 2019, goods costing rupees 1 lakh were given away for advertisement purpose. No entries being made in the books. I have told you, when the goods have already gone out and if it is not sales, then such goods should be eliminated from the trading either by deducting from purchases or showing in the credit side of trading account. Either you can deduct from purchases or you can show it in the credit side of trading account. Why should I do that? Because if you don't do it, even those stock also you will tell it was there on the date of hire. See, it was not on date of hire, no. See, how do you find out stock on the date of hire? Stock on date of hire you are finding by taking opening stock plus purchase total. Total goods length you are deducting what? Sales. But remaining you are presuming it should have been there on date of hire. But if you already consumed some goods, can you say it is lost by fire? No. If the goods have already gone out and if it is not there in sales, then such goods should definitely be deducted from purchases or it should be shown in the trading account credit side. By showing in trading account credit side, you are ensuring that that goods you are not arriving as balancing figure in the stock on the date of hire. Otherwise, what will happen? It will also be included in the balancing figure what you arrive as closing stock on the date of hire. So, with simple common sense only. So, you understand that. So, it is like 10 units you had, 100 units you purchased, you sold some 70 units. 110 70 units gone, you will think that remaining 40 units was there on the date of hire. But if you know 5 units have actually given for advertisement purpose, that is not to be there on stock on date of hire, no. That is anyway consciously has been sent out upon the 5 units. Either you deduct from this 100 or what you should show it in the credit side. So that you will ensure that 110 minus 75, you will be getting this as 35 only. This was the stock that you had on the date of hire. So that way, this particular 5, whatever has gone out but not there in sales, then it should be either deduct from purchases or show it in the credit side of trading account to ensure such gone out goods which was not actually available in the shop when the fire occurred should not be arrived as balancing figure. Correct? This is the basic concept. You should do that. Next, during the year 1920, a clerk had misappropriated unrecorded cash sales. It is estimated that defalcation averaged rupees 2000 per week from 1st April 2019 until the clerk was dismissed on 18th August 2019. Wow, super. This I am not discussing only presently. The rate of gross profit is constant, which means previous year GPR the current year GPR. Even if you don't tell also, I will assume the same. Previous year GPR the current year GPR, I will assume. Compute stock on the date of hire. Now this question is slightly like little more less complex only. Less complex in the sense the working wise. The previous question asked only 3-step answer. This question is asking only 2-step answer. They are not asking even how much was the loss of stock. They are asking only how much the stock on the date of hire. Just the balancing figure in the memorandum trading account, which is the stock on the date of hire. They are not giving salvage value. They are not giving policy amount. So you need not compute loss of stock. You need not compute claim. Step number 1, GPR. Step number 2, stock on the date of hire. This much only you should be calculating, right? So trading account and memorandum trading account are the only 2 things you should prepare, correct? But what you should do now this question? Take 5 minutes. Now stop the video. Now take your notebook. Maybe read the question once again. Take the calculator. Have the notebook ready. Don't take pencil and all. Take pen and open the ledger account, trading account and memorandum trading account. Try. On your own you try. Don't view the lecture. Sir, one point. This point number 2 alone I am not understanding. Break your head. Do something. Arrive at the final answer. Don't tell like I don't know. So you should do something. Illa sir, I don't know. Do something. So accordingly, please try, my dear friends. I will wait for 5 minutes. Welcome after 5 minutes. You have stopped the video for 5 minutes. No, that is sufficient. That's all required. So let me proceed. Welcome after 5 minutes. So it is very difficult for me to wait for that much time, and also 5 minutes over. Let me now proceed, my dear friends. It becomes so simple, that adjustment. Presuming you already completed this solution, imagine you have the answer, okay? So I will tell you the adjustments, my dear friends. During the year 1920, a clerk had misappropriated unrecorded cash sales. It is estimated that defalcation averaged rupees 2000 per week from 1st April 19 until the clerk was dismissed on 18th August 2019. Simple. Here also, goods have actually sold, but they have not recorded as sales. Very simple thing. Goods have actually been sold, but he didn't record. What he did now, unfortunately, this entity gave the cashier responsibility of selling goods. So what he will do, like this, dual responsibility should not be given in any entity. You will be learning in the auditing subject and all. Custodian should be different from the person who are actually dealing with the transaction. So accountant, custodian, account person shouldn't be same, like that we will tell. Here cashier who is making sales, what he do? Sell goods, collect cash, put into cash box, record it as sales. Sell goods, collect cash, put it in the cash box, record it as sales. Is now his duty. 3 duty he is doing. What are 3 duty he is doing? Selling goods, collecting cash, putting in our entity's cash box, business cash box. Also record it as cash sales. So that we 3 function he is doing. No, weekend comes na, our mind will naturally will have some lot of dilemma. So we'll have different seeking for different options and all. Corona period I don't know how, but weekend abdinale any person for that matter, any office goers will think abba weekend, some money required, so we don't have money. So sell goods, collect cash, putting into pocket, and it is not recorded. So like that, several weeks, my dear friends, he was doing it. Weekends nale, so some amount he will sell, and he put the cash in the cash box. So it is not very easy to find this. Why it is not easy to find, sir? CCTV and all, okay, no problem. But if it is not there, na, why we can't find this, na? It was not recorded as sales. So if, suppose it was recorded as sales, na, there will be cash balancing won't happen, and there we can easily trace it. Cash incoming not accounted. So stock went out to, he has not accounted. Like this he was doing. Anyway, this was the point. Now what should we do in trading account? Very simple, pa. We are not going to learn how to account for the defalcation loss, etc. The point is that the goods which has been sold should have been accounted as sales. If you are not going to account it as sales, here you are going to arrive dash as balancing figure. Stock on the date of hire as balancing figure. Appo, opening stock plus purchases, when you take total stock, from that when you deduct sales, you will get closing stock as balancing figure, no stock on the date of hire. Appo, these sold goods should have been included in sales. This is the only thing we should do, pa. Sold goods should have been included in the sales, which means unrecorded sales. You should find out how much and add to sales. So that goods is not there in the stock on the date of hire. Is it available on the date of hire? Such goods already sold? No. Customer already sold, na? Is it available with us? No. So whatever goods already sold, it should naturally be eliminated from the business shop. Correct, apa? Now there is some goods already sold but not recorded as sales. Appo, if you don't record, what will happen? Those goods also will automatically come as stock on the date of hire. It should not happen. So thereby you should find out something called what is unrecorded sales, and that amount should be added to sales amount. That amount should be added to sales amount. Like that you should take, my dear friends. So thereby what we will do is that we'll have a separate working note to find out what is the unrecorded sales. As far as the unrecorded sales is concerned, we will not be having much problem. Romba sound irukku. Nariya sound kekudha. Okay. So anyway, so let us now take up this. Okay. So step number 1. Step number 1, gross profit ratio. We prepare trading account. For the year 1819. 1920 the fire occurred. So trading account for the year 1819. Opening stock, purchases, sales and closing stock. So we have opening stock, $960 to $200. Closing stock is 13,27,200. Purchases, it is 34,82,700. No, not so. It is 45,25,000. Sales is 52 lakhs. Gross profit 52 lakhs plus 13 lakh 27,200 minus these amounts. So what is the gross profit? Ten lakh 40,000. So GPR is equal to 10 lakh 40,000 divided by 52 lakhs into 100, which is equal to 20 percentage. 20 percentage is the gross profit ratio. Then we proceed for finding stock on date of hire. So it is stock on date of hire. As far as stock on date of hire is concerned, we prepare memorandum trading account, which is 1419 to what was the 22nd Jan 2020. We have two opening stock, two purchases by sales, plus we also have unrecorded sales, two gross profit by stock on date of hire. So opening stock is again the closing stock of previous year, 13,27,200. So it is 13,27,200. Purchases is 34,82,700. Sales is 49,17,000. 49 inner column. Then we need to have the working note to find out unrecorded sales. So first what we will do is that we would like to find out number of weeks of default. Number of weeks of default. Because the question says that on an average 2000 per week. On an average 2000 per week is the default. So it has been given that in fact you also have the advertisement of 1 lakh, that is also for the year 1920 only, so that should be taken, I am sorry, for advertisement, by advertisement, which was 1 lakh, which can be taken in the credit side. Either you can derive from purchases or you can show it in the credit side. Anyway, coming back to this, it's given that, my dear friends, that he has been doing this from 1419 until he was dismissed on 18th August 2019. So we find that April 30 days default. See, we can't calculate like 1 month equal to 4 weeks always. 1 month 4 weeks down. But it will be like 4.2 weeks, 4.3 weeks, 4.5 weeks. Suddenly if you take 3 months now, it will be 13 weeks. So let's be very clear about the days and divide by 7. We know that a week has 7 days. Accordingly, we should be in a position to calculate. So this is April, May it is 31 days, June 30 days, July 31, August 18. Sir, which university you are? August 31 days? No. But 18th August he was dismissed. So that way until that date only we should be considering is what we should understand. Upon we find it 61, 91, 122, 140 days. 140 days. So number of weeks is equal to 140 by 7, 20. So in that case, default, unrecorded sales, which is 2000 rupees 2000 into 20 is equal to rupees 40,000 is the unrecorded sale. This is the cash defaulted, this is the unrecorded sales also. We are more concerned with the sales unrecorded, which is 40,000. Thereby it is 49 lakh 57,000. And gross profit, we know it is 49 lakh 57,000 into 20 percentage. 49 lakh 57,000 into 20 percentage. 9 lakh 91,400. So that we arrive at the stock on the date of hire as balancing figure. So what is the stock on the date of hire? So the 7,43,600 is the amount of stock on the date of hire. This is how we should find out, my dear friends. So this is just that some additional adjustment like this when new adjustment comes now. So it's not part and parcel of this particular topic like no clerk misappropriate etc. It's a new adjustment, so you should know how to react to that particular adjustment. That is why I ask you to try whenever a new adjustment comes, don't tell I don't know. 101st adjustment type will come in the examination. So you should have the daringness to undergo that particular aspects. So once you have that particular thought process, practice etc. So then naturally, my dear friends, we can face any type of adjustment and we can complete the solution. Suppose mistake is there also, no problem. If you completed the solution, working 8 marks na, still 4 marks, 5 marks you will get. But you should have the intention to complete it even though you don't know a particular adjustment. So, but still you should be having that particular intention to complete it.
7,44,300.
Okay.
Stock on data for 7,44,300.
744,300. Okay, so this is how we should be trying this particular problem, my dear friends. So this is copying slide for you. Question number 7, so that 1 to 11 is completed. First slide, second one, stop, copy, resume. Okay. So now proceeding further, my dear friends, it is to other questions. So let us now proceed to question number 12. So now actually 16 question we have for claim for loss of stock. 11 pakka we have completed. One question gifted, like almost everything done. Final answer alone I will mention towards the end of the topic. So we have only 5 more questions. In this 5, we have a target for this lecture, another 3 questions. If possible, if we can complete 3 questions, then in the next class we can complete 2 questions. This is how we are just planning. So let's proceed now. So it is question number 12. See, had it been like face to face, many problems I used to give as gift, and people were actually happy for solving that problem. So which means you presume everything is given as gift. Every question before I do, the moment concept comes, you please continue with the lecture. Question I am solving, you please stop the video and you solve the problem on your own and then get back into the video. So that is what you, instead of self-study, instead of reading one book, you are hearing the lecture. But you should do the problem, concept you understood, then you do the problem, then hear the lecture. That is the best practice, my dear friends. Make it active mode. Don't take this online mode as a very passive mode. Passive mode means what? Everything I will take correctly, and you learn everything correctly. You don't given any scope of getting doubts, and the problem is you get doubts in the examination hall. So instead you get the doubts, all sorts of doubts. No, like this I can do, like this. This is the way I am thinking. So all such a different angle of dimensions of thought process in you should be done during the studying time, learning time, not in the examination hall. So please try on your own, my dear friends. I don't know, more than this I don't know how to request and all, so please do it. Let's proceed further. Question number 12. Okay. On 30th March 2020, fire occurred in the premises of Messrs. Agni Brothers. Agni, fire. The concerned had taken an insurance policy, rupees 60,000, which was subject to the average clause. From the books of accounts, the following particulars are available relating to the period 1st Jan to 30th March 2020. When I read, for formality, you don't sit, you should also read properly. Full focus should be onto the reading. Sorry. Stock as per the balance sheet at 31st December 2019. The moment stock figure given on 31st December, what do I understand in this question? They are following financial year or they following calendar year? They are following calendar year, Jan to December. About 30th March 2020 fire occurred. Which year fire occurred? 2020 fire occurred. Year 2020. 2021 illa. Year 2020 la fire occurred. Year 2020 la fire occurred. What is previous year? Previous year is 2019. Year 2019. Okay. This image you should be knowing. Stock as per the balance sheet given. Purchases including purchase of machinery, like this capital expenditure included, I have told you it should be eliminated by deducting from purchases. Wages includes installation cost, you should know it should be deducted. Sales including goods sold on approval basis, rupees 49,500. It is given as 2,75,000. No approval has been received in respect of 2/3 of the goods sold on approval. The average rate of gross profit is 20% of sales. The value of the salvaged goods was rupees 12,300. You are required to compute the amount of claim to be lodged to the insurance company. Amount of claim they are asking. But they have given the gross profit margin which is on sales given. So no step number 1. So directly we will proceed for what? Memorandum trading account. Then loss of stock. I think any salvage value given. So loss of stock. Policy amount given. So policy amount given. So thereby you have stock on date of hire, loss of stock and claim. This is what we are going to do in this problem. So what do you think special aspect of this particular question? So my dear friends, a special aspect of this question is about the sale or return transaction. So let us learn maybe 1 or 2 aspect of sale or return transaction. I know you are all expert in a CPT foundation. When you have a cluster of chapters like consignment, joint venture, bills, sale or return. This was a cluster of chapter through which you already learned. Maybe 4 to 5 hours you would have spent on to sale or return. So we will spend 4 to 5 minutes on to sale or return transaction. To better understand this problem, let's take up the sale or return concept what we have learned in the lower level, and whoever not learned also no problem. Whatever we are going to discuss now presently is sufficient for you to tackle the adjustment that relates to sale or return transaction. Not merely this question, any adjustment that comes to sale or return transaction you can tackle from the adjustments from the discussion that we are going to make now. Sale or return transaction means what, my dear friends? Goods, see sometimes to penetrate in the market when we introduce a new product and all, nobody is ready to buy, no. So what we will do is that go to the customer, give them the goods, ask them to use this particular goods for some days or maybe a few weeks. and if they are liking it, they can pay money and buy the goods. If they don't like, they have to return the goods. So it's an arrangement where goods will be delivered to the customer, just delivered to the customer for their usage, where they can retain the goods after the completion of a specific period. Either they with an option will be given to the customer, either they can return back the goods or retain the goods. This is the basic concept. If they are retaining, they have to pay money and it will be treated as a pakka sale. So what all events happen? First, I am delivering the goods. Later on, they are either returning the goods or informing the concerned and they are buying the goods. So which means either they are buying the goods or returning the goods, but that happens later. Initially, I just delivered the goods. Later on, either they return the goods or they will buy the goods. Buy the goods. Retain means buy the goods. At that time only, sale is happening, buying is happening, purchase is happening. So, this is the basic concept of sale or return transaction. My dear friends, for accounting purpose, when you learn in this chapter, you classify the sale or return casually, frequently, numerously, like the different types of transactions. Anyway, we are not going to discuss all those transactions and the memorandum books that has to be maintained, etc. and all. It's not a complete discussion about the chapter, but generally the accounting is, because this is not a regular phenomena in most of the business. Most of the business sale or return will happen, but it's not like every day they are selling on sale or return and all. Once in a while, to penetrate the market, it's a promotional activity, they do sale or return. So how they will account now? When the goods are delivered to the customer, they record it as sales. When the goods are delivered to the customers, it is recorded as sales. Is it correct, sir, to record it as sales? No, because it is not sales. When I have delivered the goods, can I expect money from the customer? No. Only if they are happy with the goods and they are informing that they want to buy the goods, then only it is recorded. It is sale and thereby it should be accounted as sale. But we don't do this. What we will do? When the goods are delivered to the customer and we are telling after 15 days, either you should return the goods or you should buy the goods. Like that we are telling. 15 days free usage. You can use it in any manner. Imagine it's a vacuum cleaner I have given. You can use it in any manner for the 15 days, and after 15 days, if you are liking it, take it or return me the goods. This is arrangement. So when the goods are delivered, what am I doing? I am committing a mistake. What, sir? What mistake you are doing, sir? Delivering to the customer is mistake. No. Delivering the customer, I know it is not sales. At that time, sale is not happening. Sale may happen after some time, may not also happen, but one thing is sure, when I deliver the goods, it is not dash. It is not sales, but I will account it as sales. So that is mistake. Is it correct or wrong? To account it as sales? It's wrong. When I deliver the goods, it is not sales, but I will account it as sales, as if goods sold. I will make the entry debtors to sales. That is how normally we make the entry. When the goods are delivered, we make the accounting entry. What is the entry we make? Debtors to sales. So then what happens now? After that particular 15 days or within the 15 days, customer calls me and says that we are perfectly happy with the goods and we are buying the goods. So that is the time sale is happening. Only when the customer accepts the goods, dash is happening. Sale is happening. So when the customer accepts the goods, sale is happening, but I won't make any entry. I know you will accept. I know you will like it. I have already made the entry. It's something like, no, my mistake has become now pakka correct. So when it is becoming right, I did not do anything. Understood? Already only I committed the mistake. It's something like, no, see, I should not tell this to you, but still, okay. So I am taking rupees 100 rupees my father's packet. Sunday, friends are calling. So I am taking 100 rupees secretly from father's packet. Very good persons only. So still guilt feeling, you're stealing 100 rupees from father's pocket and going, but still taking it money, because so many memories coming, so lot of things we have to spend. So taking 100 rupees and I'm going, but guilt feeling is there. Now, am I doing correct thing or bad thing? Bad thing. It's a mistake. Now when I'm going so I didn't inform anything, I didn't do anything and all, very secretly going. What happens? Father is calling, die! So then I am waiting, I got caught, etc. He says that, where are you going? I'm going out with friends. Okay, then you take 100 rupees from my pocket and go. So then I will feel like, oh, wow. So will I take another 100 rupees? No, now I'm extremely happy here. Already done a mistake, it's got rectified. Something like that, only, my dear friends. When the goods are actually delivered to the customer, I have accounted that as sales. I have accounted that as sales. So debtors to sales. But is it sales? No. Is it correct thing or wrong accounting? Wrong accounting. But later on customer says, sir, we are happy with the goods. Then it has become correct. So I won't do anything. So this is a normal happening. Okay. I just taught you not. Now insurance, we have just gone into the sale or return transaction. Suppose customer calls and says that we don't want the goods and they are returning the goods. Returned the goods. If they return the goods, no problem, we'll make the entry sales to debtors. We'll make the entry, say if they already returned the goods, sales to debtors. So it's okay, no problem. So because henceforth they are not going to accept the goods, they have already returned the goods. When they return the goods are with me only, correct? So I will make the entry no more money receivable, it is not sales, so I will make the entry sales to debtors. It is not sales returns to debtors because it is not actually sold. So I should simply nullify the sales. It is not to be treated as sales returns because sales returns, when you can say only if you actually sold and the goods are returned, then the sales returns, correct? So thereby we will make the entry sales to debtors returned. Now there is another scenario possible. When I prepare my financial statements, neither they have accepted, not accepted, not returned. Not accepted, not returned. Which means it is so sales only, no, because time limit is still there. I given them 15 days time, only 8 days over, still we have 7 more days. So during the 7 days, they may accept or they may return. So that scenario, what should I do? At that scenario, my dear friends, if you are going to prepare financial statements, even then you should reverse the sales, because in that year, is it sales? Because we are preparing financial statement, I have delivered the goods and I have accounted as sales. On that date, they have not accepted. They have not returned also. Future, they may accept. One thing is sure, in that year it is not sales. Upon that year, at the end of the year, I should make again a reversal entry, sales to debtors. Even though they have not returned the goods, I should make the entry sales to debtors. And one more thing what I should do is that the goods, for the entry for which I made a sales to debtors, I should also make one more entry as stock with customers to trading account. Stock with customers to trading account. Sir, why this entry you are not making here, sir? Why you are not making this entry here? Sales to debtors you made. This goods also, it is there with you, na? See, when they have already returned, now it is whose goods? Customer goods or businessman goods? Goods are already returned. If a customer goods are businessman goods. Businessman goods. It is not accepted, not returned. Whose goods? Customer goods or businessman goods? Who is the owner? Businessman only. Businessman only. Correct. That particular goods, it is my own stock, so I should record that particular stock in my trading account. But why you are not making that entry here? Now, please you understand. When they have already returned, that goods are physically there in my shop. So in my physical stock taking, that goods will be included. Do you understand? When the goods are already returned, it is there in my shop, and thereby in my stock taking of this particular shop, I would have included that closing stock. But this goods, who is the owner? Still I am the owner, but goods are physically available where? Customers. In my physical stock taking, whether I would have included that stock? No. I have to include that particular good separately into as if it is my stock. Like that I should make an 2 entry I should make at the end of the year for those goods for which neither it is accepted nor it is returned. What are the 2 entries? Reversal of sales and including as my stock. Understood? But if it is already returned, reversal of sales is sufficient. Automatically it will be included in my stock because it is physically came to my shop. Do you understand this? So I should make 2 entry only for those goods which is neither returned nor accepted. Which is neither returned nor accepted. I should be making 2 accounting entries. I hope you are following this. What are the 2 entries? Reversal of sales. What is the reversal of sales entry? Sales to debtors. And one more entry I should make. Stock with customers to trading account. Understood? Sorry. Like this, I should be making 2 entry. One more point, let me make the point. With that, I am completing this topic. This chapter is over. Sale or return chapter is over. Whatever you learn in 6 hours, I am explaining in 6 minutes. So listen carefully, my dear friends. This entry should be at sale price and this should be at cost price. The first entry should be at sale price, because I have recorded the sales only at dash price, sale price. But I should include into my stock at cost price. This point also you should be aware of. Understood? So that way, my dear friends, we understood a basic accounting for sale or return transaction. Basic accounting for sale or return transaction. Now come to this question. Once again, let us read this. Say other things, okay, opening stock, purchases, machinery is there, installation expense, all these things how to eliminate we know. But sale or return, I don't know how to discuss, we will understand, my dear friends. Sales. Current year sales, including goods sold on approval basis amounting to 49,500 is 2,75,000. What does it mean? 2,75,000 includes 49,500 which was sold on dash basis, sale or return basis. So total sales, which means remaining sales are normal cash sale, credit sales. So outright sales. And the 275 lakh, 49,500 alone was sold on dash basis, sale or return basis. Okay. No approval has been received in respect of 2/3 of the goods sold on approval, which means even though I have included 49,500 into my sales, but we have not received any approval for 2/3 of the goods sold on approval. Which means what is that you understand? 2/3 they have not made the acceptance. Which we also understand it is not returned also. It is not returned also, but so far they have not given acceptance. We also presume the time limit not expired. So, sir, there is a possibility I can assume time limit expired. No. See, when they have given approval not made now, which means still they have time to approve it. So, thereby please to understand, out of 49,500, 2/3 of the goods sold on approval, they have not given the approval. Which means is it sales or not sales?
Not sales.
Not sales. 49,500 lakh, 2/3 is not sales. Which means remaining part of information also you should construe. What is it you should construe here? You should understand that 1/3 is approved. When they say specifically total 49,500 lakh, 2/3 they have not approved means what is that implied understanding you should have in the problem? 1/3 has been approved, which means 1/3 is sold. So 2,75,000 includes 49,500. In that some mistake is there. Correct? Including this transaction as sales is wrong, but fully wrong, 1/3 wrong, 2/3 wrong.
2/3 wrong.
2/3 wrong, because 2/3 are not sales. 1/3 anyway sales da. So thereby pakka 1/3 no problem. Problem is only with the 2/3. 2/3 is actually not sold. But what I should do in my trading account, the 2/3 of 49,500 I should deduct from sales. I should remove from sales. But I should also ensure that it is taken separately in the trading account as stock with customers, and that to a dash price, cost price. 49,500 is at selling price. We should know how to find out that cost price. I hope you are following this. So thereby first 49,500. 49,500 1/3 sold, no problem. Don't do anything. 2/3 not sold. Remove from sales. Remove from sales and include it as stock with customers. This is what we are going to do. I hope you are following this. So Pakkava I have explained first sale or return transaction regular how to account I told. In this question what is the situation also I told. They have accounted 49,500 as sales. But later on they are telling 2/3 approval not received, which means 1/3 approval already received. 1/3 already sold, no problem. 2/3 not sold. Reverse the sales entry, included as stock. Included as stock with customers. That stock is in our shop or with customers? With customers. So thereby it should not be part of the stock on date of hire. It should not be stock on date of hire. Only those stock which is available in our shop. Some stock we are the owners, but is available in some other place, then that is not stock on date of hire. I hope you are following this. Fire policy means it is stock which are stored in a particular place. Now this stock I purchased from supplier, it is on the way in transit, then that is not stock on date of hire, even though I am the owner of the stock. So stock on date of hire does not mean the total stock that exists on a particular date for which I am the owner. It is no. It is only the stock which is available in the shop on the date of hire. I hope you are following this. Stock on date of hire does not mean the total stock for which I am the owner. I may have stock of 5 lakhs which is available in 5 different places. 1 lakh with customer, 1 lakh in one branch, 1 lakh in some other place. In this business shop, I have only 2 lakhs and the 2 lakhs I can take it as stock on date of hire, even though I am owner of stock for 5 lakhs. Understood? So thereby, when I say stock on date of hire, it should be those stock physically available in my shop when the fire came. Fire is not something like happens attacking. Fire is attacking all my branches, etc. separately. Understood? Fire came in one of the place. Then when I say stock on date of hire, those stock for which I am the owner, which is physically available in that particular shop in which fire accident occurred. I hope you are following this. So thereby, please be very clear, my dear friends. This stock is available with customers. So I should mention that very clearly. I should not include that as part of stock on the date of fire. This stock, who is the owner? I am the owner, the customer is the owner. Whose stock is this? I am the owner. But should I take it for the purpose of claim? No, because it is a stock which is not destroyed by fire. It is available at customer place. It is not at all destroyed by fire. It is not stock on date of fire. Understood? That is how you should be understanding, my dear friends. So let me proceed here. So GPR is given. So that directly I am proceeding for the memorandum trading account. So it's question number 12. Question number 12. We have straight away finding stock on date of hire. We take memorandum trading account. As far as memorandum trading account, it was actually 30th March. So 1st Jan to 30th March. We have opening stock, purchases. Opening stock 95,600. Purchases 2,70,000. Minus machinery purchased.
30,000. 2,40,000.
Actually, I have explained this. Now, what you should do, stop the video first. Solve the problem. Now, I have explained solve the problem. And arrive at the claim answer, not merely one working, then see the video, then go to, see this is again, no confidence. Some students what they will do one step, in the step correct, go to second step, this step correct, like that only people go. Don't have that made difference, like the moment you complete first step, believe it is wrong, believe it is correct, and go to next step, and go to next step, and arrive at the final answer. And suppose maybe first, sir, what if my first step is wrong? No problem, redo it again. What is your laziness to write? So please, my dear friends, otherwise your confidence will never improve. Sir, you tell me like, sir, correct, we play a game like, put boxes, throw it, closing the eyes. and we'll just walk by closing the eyes, correct, wrong, etc. and all. Shouldn't be like that, my dear friends. So you should definitely solve the problem completely, then only come back to the solution. Each step also you should not verify. That's the way you should practice also. Okay. Anyway, coming back to this, my dear friends. So it is purchases minus machinery. Then we have wages. What is the wages amount?
50,000.
50,000. Wages 50,000. Then minus installation cost. How much?
3,000.
So 47,000. Then buy sales. Given the question as 2 lakh.
75,000.
Minus sale on return. It is 49,500 into 2 by 3.
30,000.
33,000. So then we have stock with customers. As far as stock with customers is concerned, it is, my dear friends, it is 33,000 into 80%. 80% means 80 by 100. 80 by 100. Sir, should I apply like 20 by 120 and all? So students will come like this. Sir, 20% given, sir, in the question. So should I apply 20 by 120? No. The margin of 20% is on dash. Sales. What does that mean? 20 by 100 on sales. What does that mean? If sale price is 100, profit is 20, cost price 80. What does that mean? 20%, 20% on sales. So thereby it is sales is 100, profit is 20, cost is 80. So which means 33,000 is 100. Otherwise, what is 18 you are finding out. Understood? So that way you are directly finding out the cost to price. So this represents 100. What is 80 you are finding? Directly you are, or you can find out 20% and deduct it. 33,000 into 20%, not 20 by 120, 20 by 100, and you deduct it. Instead, directly multiply with 80%, no problem. So directly stock with customers. What is that amount?
26,400.
26,400. So then you also have gross profit here. Gross profit is 2,42,000 into 20%.
48,400.
48,400. So you will be having stock on date of hire as balancing figure. Stock on date of hire as balancing figure. How much is that amount?
1,62,600.
So it is 1,62,600. So we are getting 1,62,600 as the closing balance, my dear friends. So this is how we will be arriving at, my dear friends. So I think we have taken all. So 1,62,600. Now proceeding to loss of stock. As far as loss of stock is concerned, we have stock on date of hire minus salvage value. 162,600 minus
12,300.
1,50,300. 1,50,300. You have claim. As far as claim is concerned, it is policy amount is rupees 60,000.
Yes, sir.
60,000. So first of all, we know it is partial loss. Number one, we presume that it is mentioned in the policy about average class, and third is it is underinsured. Underinsured. So thereby, claim is equal to. So we'll write the formula: loss of stock into policy amount divided by stock on date of hire. 1,50,300 into
60,000 divided by 1,62,600
is equal to
55,461.
55,461. We have 55,461, my dear friends, is how we arrive at this particular claim. I hope you understood this. Bakka?
Yes, sir.
Okay, so my dear friends, just proceeding for the copying slide. But before the copying slide, let me clarify a few points. This is technically correct way of doing. Now, what did we do? The sale or return properly we have accounted. How 49,500 totally delivered to the customer. 2/3 not approved means 1/3 approved. 1/3 approved means already sold. Is it correct to be there in sales? Yes. 2/3 it is wrong to be included in sales. So we deducted it, but we are telling it is not stock with us on date of hire. It is stock with customers. So we have separately taken this. Suppose if you don't make this entry, what will happen? Even this will also be arrived as balancing figure here. You understand? So why do I take this amount separately here? Because we feel that it should not be available as stock on the date of hire. Why? Because it's not the stock available in our shop. It is stock available where? It is available with customers. This is the point. Now I will tell you, my dear friends, that suppose you ignore the sale or return transaction. The 2/3, actually 49,500 is there in sales.
Yes, sir.
49,500 is there in sales. If you take the technical accounting of sale or return, this is the way to be done. But if you come into the insurance claims chapter, you know that the 49,500 goods are available with whom? Approved or not approved? Approved or not approved, it is available with whom? Customer. By including in sales, definitely it will not be there in this stock on date of hire. If you have accounted as sales, definitely it will not be part of stock on date of hire, because from total stock you are reducing sales. Correct, Appa? From total stock you are reducing sales. So thereby, naturally, by you including 49,500 in the sales, if you calculate from this chapter viewpoint, actually you can ignore this transaction, because of the 49,500 are physically available with customer. So no problem in you deducting it from your business. So even if it is wrong to include in sales, but it is not there with you now. Here we are not going to question about what is correct sale, what is wrong sale. Goods, what is there in with us and what was already gone out. So that balance, how much was there on the date of hire, correct?
Yes,
suppose if you have not done all these things, what would have happened? I will tell you, my dear friends. You will not have this number, correct? You will not have this number.
Yes, sir.
Similarly, you will have 2,75,000. You will have 2,75,000. So you will calculate directly 2,75,000 to 20%. So what would have been the profit here?
55,000.
Profit would have been 55,000. So now you calculate this 95,600 plus 2,40,000 plus 47,000 plus how much? 55,000, not 48,400, minus 2,75,000, 2,75,000,
1,62,000.
162,600. So which means you simply ignore sale or return transaction, still you will get 1,62,600. So which means some students used to come and tell, sir, I did like this, is it correct? For this topic it is correct. Technically if you ask me the accounting part, it is not correct. So if you look in the study module solution, this is the solution given. So thereby I want you to follow that particular solution.
26,400.
I want you to have that particular solution. So even if you ignore the sale or return transaction also, still you will arrive at 1,62,600 answer. So there won't be any issue with that, correct? I have explained both the ways. Why like that? If I ignore also I am getting the correct answer, because anyway the goods are not with us. So no problem, you not deducting it from sales, not including a separate stock, it will still give you same 160,600 answer. Like that I am explaining an alternative way of working also. But in your study module, in the RTPs, and study module also the question is there. So there it is given the same way only. So let us try to the extent possible, the presentation of IC alone will stick on with. I hope you understood this concept, right? So let me now give you the copying slide here, question number 12, that way we are completing. Copying slide. Okay. Okay. So just proceeding for the next question now. So we have done question number 12 also. Now let us proceed. 13th question, what is that? So, question number 15 is the gift today. Today's gift is question number 15. 13, 14, 15, 16. 15 I am gifting to you. Maybe just I will read and I will tell you what is to be done. A fire occurred in the premises of Messrs. Fireproof Company on 31st August 2020. 31st August 2020 fire occurred. From the following particulars relating the period from 1st April 20 to 31st August 2020. So 2021 the fire. About previous year what? 1920. You are requested to ascertain the amount of claim to be filed with the insurance company for the loss of stock. The concern had taken insurance policy was 60,000. Policy amount 60,000. Stock as per balance sheet at 31st March 2020 99,000. 1920 into the previous year. Our previous year closing stock or opening stock? Previous year order closing stock 99,000. Purchases 1,70,000 to be understood as purchases of that particular period. Wages including wages for the installation of a machine 3,000. Sales, sale value of goods drawn by partners, cost of goods sent to consignee on 16th August 2020. Cost of goods distributed as free samples. I think they haven't given this information about entire information about preceding year. Maybe margin somewhere they should mention. All this information for the year 2021 only. While valuing the stock at 31st March 2020, rupees 1,000 were written off in respect of a slow moving item. The cost of which was 5,000, which means what they are telling in the previous year. When they are valuing goods costing 5,000, they have reduced 1,000. They have written off 1,000. Goods costing 5,000, they have reduced how much? 1,000, which means they have valued this at 4,000. So in the closing stock, already they have included some abnormal goods at 4,000. In the closing stock of previous year, they have included abnormal goods at 4,000. Total closing stock given in the question, if you see, it is 99,000. Closing stock of previous year is given as how much? 99,000 includes abnormal goods of 4,000. In the previous year, they have already reduced 1,000 rupees. In the previous year, they have included abnormal goods at reduced price or original cost? Reduced price. But 99,000 includes abnormal goods at 4,000. What is the normal goods? 95,000. 99,000 is the total goods. 4,000 is the dash goods. Abnormal goods. So what is the normal goods? 95,000. What is the abnormal goods? 4,000. Because we are going to prepare here only memorandum trading account. So in the memorandum trading account, you have to have two columns, abnormal goods column and normal goods column. In the abnormal, opening stock, if you write, normal goods column, you will write 95,000, abnormal goods 4,000. So that is how you should be writing. Original cost is 5,000. Original cost is 5,000. But reduced value 4,000. And the reduction have happened in the current year or in the previous year itself? Previous year itself. Thereby in the opening stock, I should write 4,000 or 5,000? 4,000 only I should write. Understood? That is how you should be understanding. Anyway, purchases given, wages given. Wages, like installation of machine is there, you should be excluding it. Sales value given. Sale value of goods drawn by partners 15,000. Sale value of goods drawn by partners 15,000. So this amount should be either deducted from purchases or shown in the credit side. Anything you can show. But only thing is should be converted into cost price. Should be converted into cost price. Sale value of goods drawn by partners, first of all, not sales. See, own business, I consume something, I cannot book profit. I am running hotel, I am only eating most of the food. Can I book more sales and book more profit? No. So thereby, please understand, it should be converted into dash price, cost price. Next we have cost of goods sent to consignee on 16th August 2020 lying unsold with them, 16,500. So this goods has been transferred to consignee, which means is it there in our shop or with consignee? It is with the consignee. Goods has been sent to consignee. It is there in our shop. It is with the consignee. It is with consignee. It is not there in our shop. Already goods have gone out. What I should do? Again, this goods also I should reduce from purchases, or I should be showing in the trading account credit side. So whatever goods has already gone out, but it is not sales. But if it is not sales, I should be either deducting from purchases or I should be showing in the trading account credit side. Like that I should be taking. Next, cost of goods distributed as free samples. So even this also goods has been sent out. So what I should do? I should be deducting from purchases or showing in the trading account credit side. All these three numbers. These three numbers I should be deducting from purchases or show it in the credit side. Only thing is this number should be converted into dash price, cost price. Other two already appearing at cost price. This information you should be knowing. Next, while valuing the stock on previous year, 1000 was already written off. Original cost is 5000. This information we already considered. About opening stock, when you write, what is opening stock in the normal goods column? 95,000. What is abnormal goods column? 4,000. Original cost price na 5,000. Book value is 4,000 and we want to take only 4,000. A portion of these goods were sold at a loss of rupees 500 on the original cost of 2,500. Which means a part of the goods whose cost price is 2,500, was sold at a loss of 500 rupees. It is sold for how much? 2,000. Here sales given 2,42,000. Other 2,000 is dash sales, abnormal goods. Normal sales 2,40,000. In your abnormal goods column you will write 2,000. Normal goods column you should write 2,40,000. And the point you should be knowing. Correct? Seri. Then remainder of the stock is now estimated to worth its original cost. Actually total original cost 5,000. Valued at 4,000. Other goods costing 2,500 sold. Original cost 5,000. Valued at 4,000. Out of that much goods costing 2,500 was sold for 2,000 rupees. So remaining goods is having how much cost? 2,500 is the cost. What should be the reduced value? Reduced value should be 2,000 rupees. 5,000 rupees was valued at 4,000. 5,000 rupees was valued at 4,000. Goods costing 2,500 was sold. So remaining cost is 2,500. 5,000 to 4,000. 2,500 how much ba? It should be 2,000, half the amount. This calculator you should not take 5,000 to 4,000. 2,500 how much? 2,000 rupees should be the reduced value. And this is what I should take it as closing stock. But in the question it is given that the remainder of the stock is now worth its. About how much I should take? 2,500 I should take. I need not go for the calculation and all. Straight away I will take closing stock of abnormal goods as 2,500 because total goods cost 5,000. In that goods costing 2,500 sold. Remainder of the abnormal goods cost price how much? 2,500. Reduced value how much? 2,000. If this statement not given, I would have taken only 2,000. But since it is given, I will be taking at 2,500. Understood? Then normal goods column you should find out profit. Adukku margin required, which is given in the question as 20%. Simply mention 20%. It is on sales or cost? On sales. I should be applying 2,40,000 into 20%. 2,40,000 into 20%. It is 84,000. So that in the normal goods column, you will arrive at closing stock as balancing figure. Abnormal goods column, profit or loss will be the balancing figure. Closing stock is not the balancing figure. What is the closing stock of abnormal goods? 2,500. So that way you should be completing that memorandum trading account. Add both normal goods and abnormal goods. From the deduct the salvage value of 20,000. You will be getting loss of stock. Will be getting loss of stock. Then compare with the policy amount, accordingly should be computing the claim. Okay, wow. So special issues in this problem is one area is the normal area, the abnormality area, whatever we discussed in the few problems. Then in the three items should be either deducted from purchases or shown in the trading account credit side. The last two items already appearing at cost, no problem, but in the 15,000 should be converted into cost price. How to convert? Very simple pa. What is the margin? Margin is 20% on sales. 15,000 is selling price or cost price or selling price. Or directly you apply 20% and deduct. Instead, you can directly multiply with what percent? 80%, you will be getting the cost price. Understood?
Yes, sir.
Elaborate. I have discussed this. Once again, opening stock, memorandum trading account. Here, no trading account, no GPR working. Straight away, stock on date of hire. Why? GPR is given in the question. How much is the GPR? 20%. So, thereby, you directly proceed for finding stock on the date of hire. Prepare memorandum trading account. 2 opening stock, normal goods, 95,000, abnormal goods.
4,000.
Then purchases, 1,70,000, wages 47,000, sales 2,40,000, 2,000. Then the remaining 3 numbers should be shown in the trading account credit side. Understood? Then you also arrive at this particular profit. Then closing stock as balancing figure. In abnormal goods column, closing stock is directly taken at 2,500. Profit or loss is balancing figure. Like that you should solve. Understood?
Yes, sir.
So this particular problem is gifted to you. Pakka gift. Now let me proceed for another question here. Which is question number 14. We are going to try question number 14. So that in the next class I will be having only 2 questions. So maybe the 2 questions, the moment it is completed, maybe 2 hours lecture we can just provide, and with that this topic loss of stock will be completed. Okay, listen carefully. A fire engulfed in the premises of business of Messrs. Danger liye poi fire. The business of Messrs. Danger on the morning of 1st July 2020. The building, equipment and stock were destroyed and the salvage recorded the following. Building 8,000 rupees, equipment 5,000 rupees, stock 40,000 rupees. The cost of salvage amounted to rupees 17,000. The following other information was obtained from the records saved for the period from 1st January to 30th June 2020. Okay. Sales 23 lakhs, sales returns 80,000, purchases 19 lakhs, purchase returns 25,000, cartage inward, carriage inward 36,000, wages 15,000, stock on hand 31st December 2019 3 lakhs, building at cost, equipment at cost, depreciation provision till 31st December 2019, building 2,50,000, equipment 45,000. No depreciation has been provided since December 31st December 2019. The latest rate of depreciation is 5% per annum on building and 15% per annum on equipment by straight line method. Normally, business makes a profit of 25% on net sales. On a claim being made on the insurance company, the claim was settled for rupees 10,50,000. Give necessary journal entries in this regard. Like this one special question. Sir, you told only loss of stock, now building comes, furniture comes, it came. So, then what do you do, sir, out of syllabus? See, it's not out of syllabus because when furniture destroyed by fire, directly you should look into what was the book value of furniture. It won't be like some 4-step working or 8-step working, etc. You should find out book value of furniture by the previous year year end. Then charge depreciation till the date of fire. Or fixed asset destroyed by fire. Now, very easy computation, my dear friends. Suppose you have fixed assets destroyed by fire. How stock we discussed our discussion, we want to prove first how much stock we had on the date of fire. Then if I can find out salvage value, then the total stock on the date of fire minus salvage value is what I lost by fire, correct? So before fire what I had, then after fire what I have now, balance is what I have lost. Before fire I may have 5 lakhs. After fire I have only 50,000, which means I saved 50,000, which means what? 4,50,000 I lost by fire. Simple common sense, no? Apo, if there is some fixed assets or PPE means, what we should do? Carrying amount, we call this carrying amount, or that is book value. Carrying amount, or it is called as book value by the end of previous year. Book value end of previous year. Why do you start with previous year? Because previous year financial statement available with somebody, we already told you na. Then we should charge depreciation for current year up to date of hire. Up to date of hire. So if you deduct that, naturally this was the book value of that particular asset, book value of asset on date of hire. Book value on the date of fire. Now this is what I would have destroyed by fire. Fire came, destroyed furniture. Now this is what I would have destroyed by fire. Correct, pa? The book value at the beginning of the year minus depreciation till the date of fire is the furniture I have destroyed by fire. Very simple common sense. Idhukku 10 different workings not there. Appo you can't tell no syllabus not included, so you can't ask such question. So you should apply common sense. So such common sense question when come, then naturally you should be applying it, my dear friends. So thereby, now one more deduction is that to find a loss by fire. To find a loss by fire, suppose you would have saved some furniture. So you may have some 10 chairs, 2 tables, etc. Or 1 or 2 tables you would have saved, no? So which we call it as dash value? Salvage value. So we will call it as salvage value. So you would have saved. So this is what we understand as loss by fire. So which means the book value of asset on date of hire, like how we find out through memorandum trading account stock on the date of hire. Same way you should find out furniture on the date of hire, machinery on the date of hire, building on the date of hire, like that you should find out. Correct, Abba? How to find out the asset on the date of hire? Asset at the year beginning minus depreciation till the date of fire, like that you should find out. Understood? Once again, how to find out whatever asset destroyed by fire? How to find out? It is asset at the beginning of the year minus depreciation till the date of fire. It is not full entire year depreciation. It is depreciation till the date of fire. Is the value of asset that we had on the date of fire minus salvage value will be there, nothing but amount by fire. Correct, Abba? Like that you should be in a position to calculate, which will be very, very easy, my dear friends. Understood? Sorry. Apo, you should also be knowing this particular depreciation concept here. So what is given is the depreciation at cost. Depreciation is given at cost. Apo, and they also given depreciation provision till 31st December 2019. This is called accumulated depreciation. It is called accumulated depreciation. So this is the original cost of the asset. This is not the book value at the beginning of the year. So this original cost minus accumulated means total depreciation till 31st December 2019 will give you book value on that date. Will give you book value on which date? 31st December 2019. This is the original cost of the asset. This is the total depreciation till 31st December 2019. If you deduct total depreciation till that date, you will get book value on 31st December 2019. This is the original cost. From that you deduct total depreciation till 31st December 2019. If you deduct, you will get book value till book value on 31st December 2019. From there you should deduct further depreciation till date of hire. You will be getting the value of asset on the date of fire. From that you should deduct
salvage
value. Will be getting the asset which was lost by fire. I hope you are following this. So like that you should be understanding. Suppose they have given this is book value at the year beginning now, then I need not deduct total depreciation because here only already depreciation deducted. If this is given as book value at the beginning of the year now, then I should deduct only dash depreciation of current year. But this is given a dash cost. Which means on the asset they have not charged depreciation. You have different accounting for depreciation. No, depreciation to asset one entry, depreciation to provision for depreciation another entry. There are two ways of accounting for depreciation. What are two ways of accounting for depreciation? Depreciation to asset, which means each year in the asset only depreciation keep on reduced. Correct, apa? Another method is depreciation to provision for depreciation. Means what? Instead of reducing depreciation from the asset, you create a liability called provision for depreciation. So that asset will always be appearing in the books at original cost. And the total depreciation what you charge keeps on accumulating. You create a liability. Do you understand the discussion? Yes, there are two methods of accounting for depreciation. One is depreciation to asset. The other one is depreciation to provision for depreciation. So if you charge depreciation to asset, that year only the asset will be reduced. If you charge depreciation to provision for depreciation, then asset will always be shown at dash. Original cost. To find out book value, you should be deducting that total accumulated depreciation. I hope you are following. Yes, so that is how you should be taking, my dear friends. So that way for assets we can calculate. For stock you should be taking all the computations. So here if you analyze the problem, my dear friends, we find that the fire happened by 1st July 2020. Let's see how the information has been provided. Stock and all by 31st December 19. First, they are following calendar year, financial year, calendar year. We are understanding fire occurred by 1st July 2020. It is year 2020. Year 2020 is a fire year. What is the previous year? 2019. So we need information of 2019. But the question is not giving separately purchases sales of 2019. So then definitely we require the GPR, my dear friends. It's given normally business makes a profit of 25% on net sales. So profit is 25% margin given. Straight away what and all we can do now? First find out stock on the date of fire. Then you can have a separate working for building and equipment on the date of fire. Then you can have the next working as loss by fire, which is you can have separate column for stock, building, equipment and the amount on date of fire minus salvage value, you will get loss by fire. Then we understand, my dear friends, for this they have given there is no separate policy amount and all mentioned, my dear friends. There is no separate policy amount mentioned, but it has been told that they are settling the claim at 10,50,000. About whatever we had lost by fire, we are making the claim, but we may claim for 14 lakhs, but it's been given that insurance company settled the claim for how much? 10,50,000. It will never be a situation where you claim 9 lakhs, but insurance company you give 10,50,000. So definitely your claim is either 10,50,000 or more than 10,50,000, and they are settling 10,50,000. The balance amount, if any, should be borne by the business as our own loss. So how to make that accounting entry also we'll explain through this particular question, shall we? So it's been understood that for the year 2020 there is a fire accident. So we'll prepare this memorandum trading account directly for finding out the stock on the date of fire. So it's question number 14. Question number 14, we'll find out, my dear friends, stock on date of fire. Stock on date of fire. We prepare what account? Memorandum trading account. They are following what year? Calendar year. So it is 1/1/2020 to
First July 2000.
July 2020. We have opening stock. How much is the opening stock?
3 lakhs.
3 lakhs. Purchases
19 lakhs.
19 lakhs, inner column.
Purchase return 25,000. 18 lakhs 75,000.
So 18 lakhs 75,000. Sales
23 lakhs. Minus returns 80,000. 22 lakhs 20,000.
22 lakh 20,000. So we have various direct expenses here. The cottage inward, wages if anything. So cottage inward 36,000.
Wages 15,000.
15,000. So I think we have taken all those relevant items there. So we can take gross profit. 22 lakh 20,000 into what was the percentage?
25.
So it is
5 lakh 55,000.
okay. So 5 lakh 55,000. We will arrive at stock on date of hire.
5 lakh 61,000.
So 5 lakh 61,000. 5 lakh 61,000 is the stock on date of hire, my dear friends. Similarly, we'll also find out next working is building and equipment on date of hire. That is by 1st July 2020. Now listen, my dear friends, we have building, we have equipment. Cost of these assets. What is the cost of these assets? Cost of the asset is 7,50,000
1 lakh 50,000.
and 1,50,000. 7,50,000 and 1,50,000. So we have, my dear friends, the accumulated total depreciation till 31st December 2019, like that information given. So what is the accumulated total depreciation? 2,50,000 and
45,000.
45,000. So when I deduct that, what do I get? I get book value. By what date?
December.
Till whatever time you deducted depreciation, that book value you get. So book value by 31st December 2019. It is 5 lakhs and 1,05,000. Now we should charge depreciation for 6 months because we want the value by 1st July. By fire date, whatever be the book value, I should find out. Correct? Now what you should not do now, it should not be 5 lakhs into percentage. That's wrong because you know it is SLM method. I think you know the difference between WDV method and SLM method. Suppose it is WDV method, now I should calculate on what amount? 5 lakhs. But here it is given as SLM method. What is the rate of depreciation? Rate of depreciation is 5% for building, 15% for equipment. So it is 7,50,000 into 5% for 1 year. So it is for 6 months. How much? 6 by 12.
18,750.
18,750. Here it is 1,50,000 into 15% into 6 by 12.
11,250. 4,81,250.
Value on date of hire. 4 lakh
81,250.
250.
93,700.
93,750. So this is how we arrive at stock on date of hire and these two on date of hire. Now what happened? This was the value on date of hire, but during fire we have saved something, so that we have not lost. So you should deduct that. So let's find out loss by fire. So listen carefully, my dear friends. Our next working is loss by fire. Loss by fire. You have what items now? Stock, building, equipment. Value on date of hire. Value on date of hire is 5,61,000. 4,81,250. 93,750. This is what I had on date of hire. I have demonstrated very clearly from my working. This is what I have on date of hire. Then when the fire accident occurred in my place, see, the building, equipment and stock were destroyed and salvage recorded the following. Abdina, building salvage, equipment salvage, stock salvage. Salvage means whatever you have saved. Okay. And I will tell you one more explanation. What is cost of salvage? This is what you saved. For saving this, you incurred some cost. It is nothing but firefighting expenses. So let's be very clear. It is not cost of building. It is cost of salvage. Salvage means general word is what? Saved. So the cost expenditure incurred for savings is 17,000. So you incurred some firefighting expenses to the extent of 17,000. Anyway, listen carefully. 8. So it is 40, 8 and 5. So minus salvage value 40,000, 8,000, 5,000. It is
5,21,000. 4,73,250. 88,750.
88,750. This is what loss by fire, my dear friends. Now listen carefully, my dear friends. So we have entries. Entries. What and all we have now? We had, my dear friends, loss of stock. You have loss of stock. Furniture loss na credited to furniture. Building loss na credited to building. And the stock loss na credited to trading account. Correct? So listen carefully, my dear friends. It is loss by fire. Loss by fire to trading account. To trading account, to building, to stock. To equipment. Then the cost of salvage. Cost of salvage. That is firefighting expense. Even that we need to recover from the insurance company unless otherwise mentioned. So here again the average class, father and all, we don't have the policy amount separately given. So it is 5,21,000, 4,73,250, 88,750, 17,000. Total how much? 11 lakhs is the loss by fire. So the total loss by fire is 11 lakhs. Now listen carefully, my dear friends. Insurance company paid, settled this amount. So this is a total loss by fire, my dear friends. Insurance company admitted first of all claim. First claim accepted and settled. First accepted. Claim accepted. Insurance receivable or insurance claim receivable. How much? 10,50,000. Profit and loss 50,000. We have to bear 50,000 because that's a loss. So just though it is loss by fire, 11 lakhs is not accounted as loss in our P&L because we are getting 10 lakh 50 reimbursed. So 2 loss by fire, or it is called as abnormal loss. Loss by fire, it is 11 lakhs. Then claim received. Claim received. What is the entry for claim received? It is bank account debit to insurance claim.
10 lakh.
Receivable 10 lakh 50,000. You should, this is how you should be making out the accounting entries. I hope you are following this. So that way, total loss by fire is 11 lakhs, which you claimed with the insurance company, and insurance company accepted 10 lakh 50,000. So balance loss we were bearing and charged in our P&L, and we received that particular amount. This is how you should calculate. So when there is assets destroyed by fire, it's not that it is part of topic and all, but it's given along with the stock. They have also given furniture last day. Very simple, furniture on date of fire minus salvage value. What is furniture on date of fire? Opening value minus current year depreciation. But sometimes opening value, if it is already appearing at WDV, no problem. But it is given at original cost. First you should deduct what? Total depreciation till that date. Then you should deduct current year depreciation. Like that only we learned this concept in this problem, my dear friends. Very easy problem only. So with that, this question also over, my dear friends. So this is copying slide for you. Copying slide for question number 14. First stock on date of fire. First slide. Maybe up to this, let me take it a second slide, even though overlapping. Second one, overlapping but still no problem. Loss by fire, and finally entries. So I have given one more question gift, for which I have already given the explanation and discussion, so which means I have only 2 questions to be tried. And if that's 2 questions completed in 1.5 hours, I will have in my next lecture only 1.5 hours. Let's see how it happens. So we'll meet in the next class, my dear friends, and we'll be concluding on to claim for loss of stock. Like this, elaborately we'll take every topic, my dear friends, so that if you sincerely attend my class, I will ensure that you are getting at least 50 marks. I am not promising 90 plus or 100 plus and all. Other than that, your focus, so many other factors count. I won't tell like, no, I can make it 90, 100 and all. I will never do that also. If I do, then I am actually creating a liability to the nation. Like, I want you to become an asset to the nation. So on your own, you are standing. It's not because of me you are standing, right? That is what I always believe. To the best of my ability, I can give you some guidance, etc. Right? Thank you. We'll meet in the next class, my dear friends.